Going on, guys? Good to see you, Jerry. Nice to see you, Alias. All right, I'm gonna wait about 1 or 2 minutes here and we'll get going. But you guys are the first three here, so you guys got first dibs on the first topic.
Not nice to see me.
Ish, you're always here, man. It's good to see you. Nothing much, nothing much. Yeah, maybe a little bit back into this 40 area at least. It's only 20 points, but VIX, with where VIX closed, you know what I mean? With where VIX closed all the way down here, VIX saw its lowest yearly close, you know? Like, it closed at the lowest we've seen all year. This is the lowest it's been. This is the lowest VIX has been since pre-COVID. Oh, sorry about that. Boom, there you go. This is the lowest VIX daily close that we've seen since lowest VIX close since January 2020. I just don't think it's gonna last. All right, let's All right. So, if some more people want to show up, they'll show up in a little bit. But is there anything you guys wanted to talk about, Jerry? I know you wanted to talk about risk to reward, right? Jerry, you there, my man? Come on, I know you're there. I won't bite. You can always just message in the chat too. Oh, there you go. You message in the chat. Okay. Yes, bro, I'm here, just not talking. All right. Yeah, no worries. Um, did you want me to cover that aspect of risk to reward real quick? Yeah, yeah, sweet. Um, okay, cool. So we'll cover risk to reward, and just the typical kind of rules to live by. Um, okay, so we'll use yesterday as an example, right? So coming into yesterday, we had a few interesting spots, right? We had that sell off on Wednesday, and then yesterday's action with PPI. Or wait, was that? Yeah, okay. We had Tuesday's sell off, and then Wednesday's action. Coming into the day, you could see we had a very established range, right? So you could see overnight they kept rejecting this 4515, right? We hit our head on it 1, 2, 3, 4, 5 times all before the open, right? And we had bounced on this lower level 4505 1, 2, 3, 4, 5, 6 times all before the open. So coming into the day, you had a very established range, right? Um, Granted, all this happened after hours when if you're trading options, you typically wouldn't be able to touch it unless you're trading futures. I know as of recent, a lot of people in the group have gotten really interested in futures, and so probably you might have had your eyes on this, but regardless of where you are, this was in the dead of the night, so at 11 p.m. my time, it was 2 in the morning for you on the East Coast, so I'm not really sure you would be watching this. But So you've got a really established range here, right? Clearly, you want to be shorting the top and you want to be longing the bottom, right? Granted, this, of course, broke out to one side and even sold off back in the bottom. So this isn't necessarily a great breakout example, right? This isn't the best example of a breakout by any means, but we're just going to talk about how risk to reward favors, okay? So let's say you see that this thing is bounced, a bunch of times, and you think up here it's going to continue outwards, right? And maybe go up to these pivot highs at 30, 32 or something, right? Um, so you think this is going to break out and head up to these highs, right? Let me just mark this off real quick, we're just totally making up a scenario right now, okay? So previous day, right? This area, this 32, got a bunch of respect, right? Got a fake breakout at the end of the day before we started making this range, okay? So if you are looking for calls right here, right, you're risking, um, you know, oh, I gotta switch my tools again. So you're risking from 15 down to 05, right? So you're risking about 10 points, okay, to make uh, about 20, right? So that's about a 2-to-1 risk, but still, that would be it's not the best risk to reward you can get. In this case, 2-to-1 isn't terrible, it's all right, but to just lotto your play for this whole 20 points and not take any trims until you get there, that's pretty rough, right? So if you had even caught the right move and you were right, on this case, it wouldn't have worked before you got a pretty harsh sell off. So entering at the top of a range is always poor risk to reward if you're looking for upside. Okay. So you're risking, if you enter calls right here, okay, expecting this to continue outwards, you're risking 10 points. And the reason I say you're risking 10 points is because you've seen it reject this spot and bounce at 15 multiple times and still stay range bound and even head back into that area, right? So this thing, if you're entering right here, expecting the breakout, and that's the thing a lot of people do. In fact, a lot of my planned plays look for these continuation setups, but there's different things that can aid in that sort of confirmation or confidence that it will continue out, right? Whether that's building value at the top of the range for an extended period of time, or the name gets some sort of news, or it's in the middle of a larger trend higher, or something of that aspect that gives you confidence that it will break out of that range. So you're willing to take that risk entering near the top of the range or a breakout, chasing a breakout over it, right? But something like this, where we're coming from a breakdown and we're basically, holding a bearish flag at lows, entering calls here, it's high risk, right? So you're risking 10 points because it could break down 10 points from here and there's still nothing really wrong with it, right? Because it could still very well bounce that range that it's bounced before and stay range bound and come right back to your entry, right? So, you know, if you're entering up here, you're willing to risk 10 points, right? Whereas otherwise, let's say you're just playing the range, okay? So we'll remove these guys real quick. You guys get the point. If you're entering shorts down here, it goes the same way, right? You're risking 10 points to make, I don't know what your, target would be. I imagine 4,500 would get some respect. That would probably be a target. Maybe 90 would be important. Whatever you're looking at, right? You're risking 10 points to make, let's say the big cycle was 4,500. So that's what you're aiming for. You're risking 10 points to make 5. Okay, so that's a 1-to-2 risk reward ratio, right? That's you're risking you're risking twice as much as what you're willing to even make. Okay, so this is a very poor setup if you're looking for downside or continuation lower out of this. Okay, so when we say a good risk to reward entry, or sometimes if you're in voice chat, you'll hear me say, I'm just gonna play the risk to reward game, right? Where it's like we're ranging, and you're not even really looking for anything. You're just playing the range, right? So you're going to short the top and long the bottom. The reason we say that is because it's a much better risk to reward, right? So let's say you were looking for this to reverse, right? So you're expecting a breakout all the way into this 30, and a stop loss would be a break under this 05. If you're entering up here, like we said, it's the risk You're risking 10 points to make, potentially 20. It's decent, but depending on your sizing, I don't know if you really want to risk 10 points with a risky entry. So instead, you look at where we've bounced. It's a clearly defined range, as we mentioned, 15 down to 05, very clear 10-point range. Your risk, if you're entering calls down here, right? Let's say you don't even catch the bottom, you enter it at like 06, right? Your risk is a significant break under that 05. So we'll even, give you a little leeway and wait for a confident close under, right? So you're risking 3 points to make minimum 10, right? So that's a 3-to-1, 3.5-to-1 risk to reward play right there. And you don't even need the breakout to be right, right? So entering off of support for longs is better risk to reward because your stop loss is so much more clearly defined and it's a small stop out, right? So for example, this is what I mean when I say you're trying to enter as close to risk as possible, right? So even if you're confident this is going to reverse as it did, right? Let's say you took swings off of this entry, okay? And you see it going and it bounced here a bunch of times and it continues range bound. Well, what you want to do is you could chase this breakout, right? Because this one ended up breaking out, and if we even look at the action here, how about the retest entry? I know lots of people play that. So this time it broke out, clearly broke out, and it retested for you, right? So this could be a decent entry. Granted, this one didn't end up following through, but it gave you a chance to enter, take profits, and then also stop out or let go of your runners at break even. So it's just kind of a whole understanding of price action here, right? So if you entered off the bottom, for example, right, you immediately take your first trim here, right? So you catch your 10 points. Boom. The trade's already green. And then you have the possibility of leaving runners on and you can catch the continuation. Great. Now you've caught the move you were looking for with a better entry, therefore letting you catch much bigger of the move. Okay. So let's say you take the entry here because you think it's going to break out, right? First you got to sit through this, right? You're feeling confident because it didn't even, it didn't even get back down to that support, so you didn't have to sit through the full range test again. But you still had to sit through it, and there's a good chance that you might have stopped out, right? There's a good chance that you got faked out and you were thinking, oh shit, it didn't break out, and now I'm stuck in the range still. Well, if you held through it, you're rewarded, right? But it definitely cost you some mental sanity. You're able to get some trims, and let's say you fully exited up here. At this point, you can look back and you can play the retest. Okay, like I said, retest of the breakout. It's very common, especially on intraday action. The retest of a breakout is a it's very, I don't want to say it's too elementary, but I would say most of you guys have been here long enough to where you've heard us mention a retest, right? I don't think we need to go over that too much, but this is a retest of the entry. It gives you a chance to, once you're on the upside of that range, this becomes the good risk to reward entry, right? Because if it falls back within that range, I'm wrong, this was a fake breakout, but also you're risking, how many points? You're risking, say, I don't know, 4 points to get back to that pivot high to make 10 points, right? So that's a 2.5-to-1 risk, right? So do I have any questions? I feel like I've been a little bit all over the place here just because I've been trying to take it, as the day was going on. But at the root of it, if you have a clearly defined range where you can see that action has taken place before, right? Where buyers have consistently stepped in and where sellers have consistently stepped in, right? Those are spots you want to risk against because your risk is so small, right? Does that make sense, guys?
Sure.
Yeah.
So what time frame do you look at?
Me, intraday
Yeah.
typically. So I always start on a daily. So when I'm looking for plays and stuff like that, I always start on a daily. And that kind of just gives me an idea of the general trend, right? Did we close the day strong? Did we engulf the previous day with buyers or whatever, right? So I start on the daily to kind of get a sense of trend, to kind of give me a little bit of a bias. And I'm using that term intentionally because, if you can get an idea of the bigger picture, it'll help you intraday to make decisions, right? Like if we're clearly in the middle of a big old green trend, you don't want to be aggressively shorting the next day just because you see 10 minutes of selling, right? Um, that could be the case. For example, if we get up here, this is probably going to be an area where we're going to have to go bullish to get up there, but this would be an area where you might be able to risk shorts, right? So I always start bigger picture. I always start the day, if I'm looking at a particular name, you guys know all I pretty much watch is SPX and ES, so spend a lot of time on this chart. But when I'm actually intraday, this is what my chart looks like. Pretty much just a 5 minute. I think a 1 minute for me is just too much noise. And, if you're looking at things such as TTM or VWAP, it can kind of overwhelm you a little bit. I know some people like a 1 minute just because you can really see, like, by the minute decision making, and you can see, clearly what levels are being respected and such. But for me, it's just a little much. Feels like the charts are just moving way too fast. Um, so I like to use a 5 minute. And every now and then, just to kind of refresh myself on the figure, I'll zoom out to a 30 minute. And I think a 30 minute and an hourly are great to decipher trend. And also just get a bigger picture of the structure of the last couple days, whether you're in a balance or in a clean trend. I think 30 minutes and hourlies. I don't really. You guys know me. I'm more of a day trader, and a lot of my plays only last between 15 minutes to an hour. So I don't really spend a lot of time on the 30 minute and hourly intraday. But if you notice that you're taking losing trades, it is useful to kind of zoom out, take a breath, and just look at the bigger picture structure, right? And so a 30 minute and hourly are great for that. But if you really want to see what my charts look like intraday, I'll typically have it on a 5 minute, and then I'm adding some stuff right now. I'll typically have a volume profile on a daily setup. So it'll look like this. And then typically I'll also have VWAP on just because I've been using it a little bit more recently, but not for much, to be honest. Very rarely do I base a trade off of VWAP. I typically focus more on volume profile. So, um, yeah, this is typically what my ES chart will look like intraday, like a 5 minute, and I'll typically have both VWAP and ES up, or volume profile. And then I've also had TTM up as well. This is a new one. I'm still honestly learning the gist of it, but it has been helpful to kind of figure out when we're kind of bottoming out, when we're kind of topping out, uh, for minor trends, right? So if we want to look at ES today, right, the first time we kind of topped out, you could see these green kind of started to taper, and once you started seeing these darker prints come in, that was when we saw a little pivot. But the trend ended up sustaining, so we ended up staying in that buy atmosphere. And the first time we actually made a lower low on the day was when the TTM flipped red, and you could see right when that candle flipped colors to more like the sell pressure was fading. That's exactly when we bottomed, right? So you see this dark red flips to light red, and immediately we start the reversal, right? And then sure enough, when the squeeze enables, that's when we start making those highs. And so when sell pressure kicks back in, you see that flip again, right? This one, I'm not gonna lie, this one was a little bit delayed. This one you could have gotten caught off sides, but I think this transaction right here was really clean. So TTM's been really helpful as well. Hoosier put me onto that. Definitely give him all the credit for that. But this is typically right here what my intraday ES chart looks like. I depend heavily on volume profile and TTM. VWAP, I just have it on because I know everyone and their mom has VWAP on their charts, and at the end of the day, it will get respect for that reason and that reason alone.
happens is like after 1 hour of the volume kind of fades out, right? Or 1, 2 hours.
Yeah,
Kind of eats into the theta decay kind of eats into the whole option value. So there's no significant move and until I end up selling a bit on a loss, then okay. And then there's suddenly a shoot up. So when do you think should we should say okay, we should continue with this until thing happens? Like what is your strategy on that kind of things?
that's a great question. I mean, honestly, one thing to just live by is that you have to know the times of the day that have the most volume are the first hour and a half and the last hour, right? They call it power hour for a reason. So,
Mhm.
uh, you can pretty much see it's the same trend every day, right? We start the day with a big amount of volume. Right around lunchtime, it kind of flattens out, and then in the last hour or two we get volume back, people making decisions, right, on what they're going to be holding through the next day. Today was no exception, right? Big volume in the morning because we had PPI. Today was abnormally high volume just because of that data release. Flat during the day, and then a big spike into close. And this is a trend that will not go anywhere. This is how the action has been for decades, and this is likely how it'll be for many more decades, right? It's just human psychology, right? They find news overnight, right? And then in the morning they act on that news and they make decisions off that news. They hold their positions through the day. And at the end of the day, right, maybe some news comes out intraday and or they're hedging or they're trying to get ahead of the curve. And so they're entering positions or selling positions at the end of the day, right? Midday is when you're going to experience the most volume crush. Um, and especially since we play 0 DTE SPX contracts, that midday is a very, very, very difficult time to trade because that's when volume is fading, IV is getting crushed, and typically you're gonna have to catch a pretty sizable move to make anything significant for that middle 2.5 3 hours with SPX, right? This is why, as of recent, you guys have seen me kind of getting my plays, kind of done in the morning, and I sit through that kind of middle portion without much action. And sometimes we'll take a trade into the end of day, but as of recent, the action just hasn't been comfortable for me, and I haven't really been willing to force anything, so I end up just sending one or two plays for that day. But yeah, this is, if you're trading, swings or whatever, I wouldn't worry about that. I really wouldn't at all, right? It's the bigger picture action you're looking for. Larger structure is what you should be focused on. Volume will matter, leading into earnings and such like that. But if you're day trading SPX, that's just a general rule of thumb. Is you know you don't really want to hold an SPX contract for much longer than an hour or two, in my opinion. Um, just because, if you catch, like, let's say, I don't know, what's a good example? Like, think of today. Think of today. If you grabbed calls this morning, anywhere here, honestly, and you were able to take some profits here, chances are you caught a 20-point move, very quickly. This move went from 720 to 820. This move was only an hour long and it was only up the whole time. So if you caught this entire move and you locked in profits and chances are your contracts are in the money, that's a situation where you could be comfortable letting your contracts run, right? And just letting runners do the work. I would hope if you caught a 20-point move on 0 DT SPX contracts that you locked something in. I would pray to God that you weren't that greedy and you locked something in. But that's a situation in which you might feel comfortable holding on to those SPX contracts a little bit longer and letting runners work, right? But typically coming into that midday section, if you're still out of the money on SPX, you don't really want to play the hope game. Okay, you definitely want to, look to get out. You can always re-enter, and the way I play it, it's very much scalpy. I don't like to think of myself as a scalper, but when I look back at my plays, I catch 10 to 15 points and I'm satisfied, right? With 0 day SPX contracts, that's good money, you know? So, you know, like I said, the psychology of everyone who's participating in the market it just arranged that way. It just arranges that way where, most volume comes in the morning and then you typically see a little bit more in the last hour. And so that middle part of the day, it's not the best time to be expecting big moves. You know, on a day like today, we got a nice trending day. It was nice, but um, that's not typical. It's not every day we get an easy trending day where you can just hold calls and fuck off for the day. Have you been trading with me particularly, or been focusing more on swings, or what's up?
I played with you and Wizard
Yeah.
most of the time.
And you said wizard?
Yeah.
Yeah, so you're you're all in SPX, huh?
Actually,
Yeah, right. That's all we trade pretty much. So I get it. Um, yeah, that the speech was definitely more geared towards you and maybe not some other people in the chat that we've got in here. I know Ish has been focusing a little bit more on longer plays. Cobain's a big swing trader. Mo's in here. What's up, Mo? Um, Jerry, I'm not really familiar with your trade style yet. I know you're newer in here, but feel free to chat, man. No one bites.
does not focus on longer play. Just trades futures.
Oh, that's new. You're newly into futures.
So like the past 3 months, I've been future traders. I've been taking a real option play in my market since the video started.
Oh yeah, I gotcha. Jerry said, I wish SPY's options moved to like SPX. I'll do 1 or 2 day trades, then swing trade. Oh, well, I mean, if you if you wish SPY's options moved like SPX, just play SPX. They're the same chart, you know? They make the exact same moves. If SPY drops $1, SPX drops $10, So yeah, okay, you're on Robinhood. Got it. Okay, well, that's your first issue. We need to get you off Robinhood and onto a more sophisticated brokerage that not only allows SPX, but allows, easy access to cash accounts. That way you don't have to limit yourself to count day trades. You have a cash account on.
Just read you see trading it there.
Yeah, I haven't heard of that happening recently, but I remember back in the day when the growth mania was still going on, about a year or two ago, that was a big issue. Well, anyways, if you want to trade SPX, you're going to have to move to a different brokerage. Again, I don't mind what you trade on, it doesn't affect me at all, but if you want to trade SPX, you got to make the move. And judging as how, me and Wizard pretty much primarily alert SPX and Hoosier alerts a lot of SPX, I think it's in your best interest. Can I just go more in the money with SPY? I mean, that's not going to change anything. In fact, that's probably going to do the opposite effect of what you want. If you're looking to make large percentages like we're doing on SPX, you're actually going to want to go further out of the money on SPY, right? You're still going to play. You're actually going to want to go further out of the money, but that's just increasing your risk. And as time goes on, those contracts are still going to get crushed depending on how far you go, right? Um, it all comes down to intrinsic value when you're comparing SPY options and SPX options. So even though they move the exact same, just like how I said, when SPY moves $1 in any given direction, that's $100 of intrinsic value on those SPY contracts, right? Well, when SPY moves $1, SPX moves $10. Okay, so that's $1,000 of intrinsic value. Even though they're still, if one of them has a 1% day, the other one's having a 1% day. They're moving the exact same. The only difference is that the intrinsic value is 10 times as large. So that's why SPX contracts seem so much crazier. They're the exact same. It's just the intrinsic value on the same day contracts is drastically different. It so yeah, changing the contracts that you play on SPY is only gonna kind of impair you, I would say. You definitely, if you want to trade SPX, you just got to trade SPX. I wouldn't go further out of the money on SPY. I mean, yes, say for example, right? I'll run this example for you real quick. Let me get some of this crap off my chart. All right. So let's look at tomorrow's contracts, for example. All right. So let's say you get a dollar move on these 452s, right? If you catch a dollar move, that's damn near 100% here. It looks like it's about 85, 90%. Um, but are you going to increase your sizing to match what you would normally put on a safer contract like these 448s, right? So let's say you're playing $500 and you can get two of these contracts, right? Or if you're playing 20 of these contracts, because they're out of the money and they're cheaper, micro moves on these contracts are going to affect your PL so much more. Okay. Granted, it'll be a lot easier to make 100% on these contracts because you only need about a $1.20 move to make it. These contracts looks like you need at least $2, maybe 250 to get a 100% move. But these contracts, depending on how long it takes that move to happen, these contracts are going to get theta crushed. SPY has not been moving confidently $4 or $5 every single day. We got a nice $5 move today, but like I said, with VIX at fucking 13, you can't be expecting that. So, if that $2 move or that $1 move takes, like today, if we look at SPY, say you entered at the end of the day, it took, just in the middle of the day. Oh, geez, what did I do? Went way too zoomed in. So just from here, from 50 to 51, we didn't even get to 51 on that push. I zoomed in too much. I gotta fix this. So, all right, say you caught nothing but this green right here, from 450 all the way up to 451, right? That move only took 5, 10, 15, 20, 20, 30. This move only took 40 minutes, right? But if you're in these contracts, they're out of the money. It doesn't really matter if they got to 451. They're getting absolutely crushed by theta by the minute in that last hour, right? So going further out of the money is not going to help you. Or going in the money would kind of preserve you a little bit, but it's going to have the opposite effect of what you want. You're not going to make the same percentages that SPX would do. It's basically what I'm getting at here. Does that make sense? All right, cool. So yeah, if you want to play SPX, you just gotta get on a new brokerage. All right.
By the way, Wax, tomorrow SPY goes is its dividend dates. So those contracts today, looking at them, they'd be a little out of whack.
Okay, makes sense. So tomorrow's the dividend day. Does that mean I get paid on Monday, or is it the ex dividend?
I think it's dividend. I think it's distribution. It's going to drop $1.50 in the morning.
Cool. Love to hear it. All right. All right. Alias, you got any more questions, or Susio, you want to look at anything, man?
I always do, man. How many are you going to let me do?
Shoot as many as you want, unless someone else has got something.
Deer.
DE, huh? What are they up to? Oh, I gotta refresh myself in this chart. I haven't looked at it in a bit. So fresh bounce off that 85. Still struggling, man. Right off that 445 again. We did not like it. And then what happened here? What happened here? Oh, that was earnings. Okay.
Yeah. No, hang on. So, I mean, we're not really looking big picture here. They're getting added on Monday to the S&P. They're replacing somebody. So you saw today, leading into that, a whole bunch of buying. And that buying started even before all that craziness happened in the market. It was going up while the market was going down. It was going up while the market was going up. It's just front running that index edition on Monday. So I'm looking at it right now. I'm just looking at it for zero DTE to keep that volume coming in for the edition.
Okay.
It tends to happen with some of this.
Interesting.
That announcement was made on the 1st, just for reference.
Okay, I'm just getting comfortable with where we are real quick. I think I remember last time we talked about this 417 to 420 area, right?
Exactly.
I still like that. Now, I don't know how confident I am it's going to get there tomorrow. If anything, I'd probably just try and catch the first dip into, I don't know. It feels like today was the day to confidently get in it when we got back over 405. But if you're expecting it to
I think
continue running up, I feel like, say it again, sorry.
I did. Well, yeah, I do kind of think we see that 416,
Oh, you got in
417.
today?
I closed it out. I actually got in on a bad entry a couple days ago um, for next week, and then I had it in this morning, and I got out with some green at the end of the day. But
Love to hear it.
the way that it closed, I don't know. I like it. I like the idea of it, so I wanted to see what you see because it's on my list.
Yeah, I was thinking today, once you saw it kind of open up and show that strength over 405, I liked that. That looked positive. I felt confident that you'd get back into this 410 area. Um, Entering here, it feels a little bit rough. What's that?
So,
Yeah, that was solid. That was solid this morning. From here though, I don't feel like it's the best risk to reward for a day trade. I do think, however, though, if you're willing to play some time, if you're willing to play next week's, I think if you just catch a dip, I feel like, 410 to 408 would feel pretty solid. Um, I feel like you can trend back into this 417 area, 417 to 420 again. I mean, that's definitely positive news, and it's working on a pretty confident reversal here. Definitely showed its strength today. Um, I'm personally kind of a little bit on the other side of sentiment wise. Like, I kind of think, market's going to see a little bit of downside over the next couple of days. John Deere, though, doesn't really follow too closely. So I think you should be fine. But I'll be honest, I don't really like the idea of like a lotto. If you're going to lotto it, I would stay in the money. I would play like, you know, I'd play like 410s or 407.5s, and these don't honestly have very good.
because maybe just go back in that same contract I was looking at for next week that I got out of. So
Which ones did you have?
look for a reentry. It was on the 420s.
Okay, yeah, yeah. So it's a
I
little
tend
far.
to go cheaper and out of the money. I
Yeah,
just look to go in the money on my contracts. I just try and guide some aggression
yeah.
to get those premiums checked up.
Four
I
twenties.
mean, this is like one of the only times you'll hear me talk about calls. So
Yeah, right. 420 is a little far from my comfort, but I do feel like if you get that move early next week, you'll still be able to make some money on these. Um, I feel like I would probably just tend for these 415s just because it's close to where we're at, and if I'm targeting 417, they'd be comfortably in the money. Um, but if you're looking to play this just tomorrow, I like a dip into that 410 to 408 area, and then just ideally close it daily over 410. Um, that would feel comfortable. And from there, today's move might need a little cool off. So if we saw something like, what Amazon saw today, where they kind of didn't like the level, dipped it, but still closed it nice and high, ideally you see something like that on John Deere, that would feel a lot
yeah,
more confident for me. But I think this spot, this 417 to 420 is a very logical short term target.
I want to introduce you to a new ticker that just dropped today. Not
Arm
because useful or tradable now. QQQY.
QQQY. What's up with this?
This is zero DTE ETF. It's the worst idea in the history of the market.
A zero DT ETF. I'm a little confused. Can you break it down for me?
I am too. We just like 10 minutes ago came across it, and it just debuted today, and it just seems like it's the worst idea, man.
I'm gonna do a quick Google search just to see if there's any. Um, okay, Defiance launches QQQY, the first ETF to utilize daily options for enhanced income. What do we got? What do we got? Okay. He's poised to disrupt the landscape of ETF high income investing. Wow, bold remarks. We're thrilled to introduce. That's what I'm trying to figure out. I'm reading about it right now on the Berkshire Hathaway Business Wire. Um, we're thrilled to introduce QQQY to the market. The daily national trading value of 0DTE options has skyrocketed to about $1 trillion. QQQY exemplifies our commitment to innovation and to meeting the evolving needs of investors. With daily options at the core of these products, we're seeking to unlock a new dimension of income generation with the ETF space. Okay, so where's the fucking
It's literally just a bunch of fucking gobbledygook. It's horseshit.
yeah, I'm trying to find like just the breakdown of
It's meaningless.
please visit the fund page. Okay, I'm on the fund page. All right. Paid monthly. Ooh. QQQY is an actively managed exchange-traded fund that seeks enhanced income, constructed by treasuries and Nasdaq 100 index options. The strategies of dude, it's just fucking buzzwords. There's no breakdown of holdings or strategy or anything in here.
It's retail robbery scheme for them to be able to trade on, like, because they can't trade, SPX and NDX. It is hard. So that's what's going to play out.
I feel like I don't know. I couldn't find any information on it, but I feel like the VIX 1D is a little bit more of a confident read, you know, just because you can see
I just wanted to. I don't think it's useful.
I mean, hey, if you give it a little bit of time, if you give it a little bit of time,
We'll see.
yeah, we'll see. But I'm still trying to figure out how the hell this VIX 1D works,
It makes sandworms. That's how it works.
Yeah, right.
It's down and then it's where.
That's interesting. But you got any other charts you want to check out, man?
Oh yeah. Can we look at ALGN?
Yeah, you were talking about this the other day.
Yeah, I'm looking at this for really. If you want to just laugh, pull up the VIX 1 hour. Is the way that these are the sandworms I'm talking about. The VIX 1D.
Oh yeah, I was just on it. Yeah, it's ridiculous.
It's hilarious.
Yeah.
That's the
I don't.
thing ever.
I'm not sure how this chart is useful to anyone.
It's not. It's just sandworms.
All right, so Legion. What I'm gonna do real quick is since the gap up, I'm gonna cut off our time frame at February 2nd. 0202. Oh, I did that wrong. There we go. And we'll throw this back on a daily. Bada boom. Throw some volume on it. All right. So big old blob so far. Tapers. Yeah, your taper's down at 300 and your upper taper's right at about 360. I'm going to mark that off real quick. 360, bada boom. All right, so pretty much just a big old fake breakout after that earnings. Immediately faded it back into the fair value area. You're kind of fighting with this point of control here. Fell under that recent balance and you immediately reclaimed it over the last couple of days. This isn't going to be an exact point here, but right about here. Honestly, I think if you're holding over this 425 or 325 area, I feel like buyers are still going to try and maintain control of this thing. Um, you know, Judging on just how this thing moves, it likes to go on these nice long, drawn out trends. I feel like if you hold this 25 area again, you're gonna end up seeing maybe a stall out at 340, but it should be able to get back into 360 given market permits it. Is there something specific you're looking to do with it?
I'm looking at short it to death.
Short it to death. Well, you are a little late, I think.
That's why I come here to ask for, reasonable people to talk me out of my low probability setups.
Hey, if it holds confidently under these last pivots, in this kind of, little range of value we made on the way down for the next few days, and I mean, probably few weeks, that would look confident. I don't think
Yeah.
this is immediately on its way down back into 300. I think, this is a pretty impulsive buy and they saved that value range, and we're kind of going to hang around this volume point of control for a little bit. I think this thing's more likely to kind of continue to see some buys back up into this 40 to 50 area before another good short appears. Um, the best spot, I think, is probably just risking against that volume taper. A pop over 60 would probably be a decent short. Um,
Mhm.
but that's down the road.
Why I'm looking at it now. So it's it's some sell off there, really heavy sell off after it was trying to curl back up off the earnings gap up. Um, was
You're talking right
off
here.
like them. Hang on, let me pull your screen back up. Um, yeah, this giant red candle just in the last few days. No,
Oh,
nothing.
this guy got it.
Yeah, yeah, that guy. So they made an acquisition where basically they were going out on their own to, or like talk about, the market chatter is they're maybe going out on their own and not going, as much with suppliers for some of their products. They hit DDD really hard as well. But it was all around an acquisition. It was an acquisition market really is like.
That
I
makes
look at this
sense.
chart. What I see is I see a lot of kind of, I mean, not the same sector, so it doesn't move the same way, but the same kind of type fever break as SMCI and a return to kind of looking at evaluations and fundamentals. Those two uh, tops before they fell off create a downtrend. And if you go down to the 172 low and you draw an uptrend, and I know you guys aren't big trend line guys, but it just follows all the way through on that lower trend and that candle. Um, 2 days ago was the first candle break below that trend.
Are you talking something
So
like
I
this?
expected it to come back up. Yeah, yeah, exactly.
Okay.
Um, so that hammer candle from like what was it yesterday? I think even as their first test below the trend line. It's not going to immediately fall off and break, but this is happening also right at the point of control, right at that biggest volume taper. The most over where you see the most volume there, and that was the first time under it, where it got saved one, two, three times. Since it broke over it. So, and then you get this giant liquidity shelf underneath, right? If the market turns away, if shit really goes down. So, I mean, I just see so much downside potential. And yeah, I'm not racing into enter this whatsoever. Because if I look at something, for like 3 months, 4 months out, I'm not, it's not a rush, right? It's the way that like you want to get right in. If it's weekly, if it's 2 weeks, you want to get in at just the right time. You don't want to miss that opportunity. But there's a lot more time. It's just something that now is pretty heavily on my eye from here forward once that trend line broke. See for when the next time they confidently close underneath it, I think that's the time to get in and start shorting with the risk against a regain of it.
So you're looking much bigger picture here.
Yeah, exactly.
Okay.
This is about one of the longer term trades you'll see me talk about. Now, the other thing is if that trend line breaks again in the next few days, then I think I get in something with not as far down the strike, maybe a 300 or 310 for October. I think it will move fast. Like you said, it does like to make those strong, firm moves once it starts before it bottoms out. But November, the contracts are just pretty expensive because they've got the earnings premium jacked into them.
Yeah.
But October has seen a little volume. The spread suck. The volume sucks. I mean, it's not like a great options trade. The chart seems like there's so much reward that I can find the right risk and the right risk level, which is what you guys are so awesome at. That can kind of manage better, better setup for me.
Yeah, I think if that's what you're looking to do, I think 250 to about 265 is that area. If that's the play you're looking to take, I think just shorting equity is your best bet. Because I was looking at the premium as well. They don't look very liquid, and you're right. They're baked in, pretty pricey. Um, I think just shorting equity, right? If you caught it around 250 to 265, right? You're maybe risking, if it pops over 280, I would say you're you know, pretty much wrong. And at that point, you're risking max $30 per share. But you're looking all the way down to 300, 280, and 250. That's, you could possibly talking about $100 a share, right? At least from just 350 to 250. That's killer. That's a killer short equity trade, and there's no time frame on it, right? So I think that's probably your best bet here instead of options. But it's definitely a patience play. Definitely a patience play, right? Like if we just kind of stall out here and then you see us start to show weakness under this 325 and really start to head back into 320, I don't know how confident I'd be in chasing it down, right? You could, but I would definitely suggest probably going a little bit lighter than you initially planned on.
Yeah, I think it's a scale in regardless or not. Scale.
I like it. I think it's a solid plan.
I like that setup. I think it's right.
Hell yeah.
One more HD.
Home Depot, huh? This one
Yeah.
feels strong, man. This one just feels strong. They've been, they're one of the names that hasn't really committed to a quality reversal since, the market really started selling off last year, in late 2021 and all that. But I will say they've just built a real solid base here. They're at the top of their fair value. I mean, if you were going to short it, this is, remember we were talking about risk reward earlier? How if you're some, if
Yeah, one of your best sessions ever, man. I've loved every second of that, man.
I,
Thank you.
I appreciate it. So one of the things I mentioned, right, if you're in a very clearly defined range, so we've got that here where this 330 to 340 area is where sellers have consistently shown up, right? So this would be the top of your range. This is one of the situations in which I'd argue that this is one of the times when I feel like, one of the criteria I mentioned, something that can give you confidence entering longs at the top of the range, expecting continuation. We just went over how that's typically very, very poor risk to reward, right? Well, this is one of the criterias that I said, if you see this, this is something that could give you a little bit more confidence in entering, expecting a breakout at the top of the range, um, looking for higher, right? When you start to see value built at the top of that range. So typically, every time we see this 330 area, what happens, right? We typically get, maybe a couple days of action, but it's typically a very strong rejection, right? This pop up lasted 2 days, rejected. This one lasted not even a day, rejected. This pop up over 330, rejected. Same thing here. One big old day over, rejected. However, this time we've really spent the last 2 or 3 months balancing up here, building value at the top of this range after one, two, three, four higher lows all at the bottom, and you're still at the top of your fair value. So to me, this is a major time frame. Like we're not going to get a more clear picture of volume than this. I'd argue from about 350 down to 330, it's nothing but pretty much empty liquidity, right? If we end up going here, right, and there's a long ways before earnings, there's not really much in terms of event risk here, right? So I feel like this is one of the cases where shorts don't look as good. Again, just looking at the chart, yeah, risk to reward says this is the spot you want to be shorting, right? Maybe just a pop into 340 and load your shorts and you're good. However, just looking at the last month of action here as we've built value towards the top of this range, a continuation outwards and working on a more confident reversal effort, if we want to throw this on a monthly, you know, this is starting to feel like a much more confident reversal setup, right? So I personally feel kind of bullish on this. I feel like Home Depot feels very strong.
So health. Yeah, your viewpoint on that.
Yeah, I mean, like, dude, they're killing it. Their earnings are just consistently strong. I mean, they had a little bit of a hiccup at the end of last year with the whole home builder and lumber price collapse and all that fun stuff, but they just increased their dividend at the beginning of this year. It's a very staple name in a lot of portfolios. Um, it's just not the name I'd be shorting, especially looking at the price action from this year in the last few months. Um, Yeah, and I'll be honest with you, I'm not. This is not coming from a place of bias at all, but like I hold plenty of Home Depot equity, and it's one of the names I plan on holding for a very long time.
Yeah, no, I mean, I value your eyes much, right? Because you look at things in an entirely different way than I do, and you look at risk levels and broader scope and stuff than I do. I'm looking at it from that recent bottom and that basically rising wedge, from the two earnings ago.
Hmm.
It's broke down. Potential head and shoulders set up at the top of a volume shelf, with a lot of room below and seeing, that failed, you know, uh, failure to build over that volume shelf. But like you said, those reversals came a lot quicker the last times it popped over that volume shelf. This time it didn't. So I, I was discounting the reality that they may be building value for that real breakout. So that's an excellent point.
Just to play devil's advocate against myself real quick here, if we are looking purely at risk to reward here, if it does pop in 340 and you want to try shorts, if you end up seeing a big sell-off day, that would look very confident for you. And, I feel like targets on that downside would be 325, and I could 100% imagine another dip into this 315 to 310 area again. Uh,
Yeah, that's the area I'm looking at for sure. And I don't tend to care as much about risk as I
I
should.
will say, if we come back 6 months from now and this thing dipped into this 310 and that ended up being the higher low and we ended up right back in 330 again, I feel like my bull thesis on this would become even stronger. That'd be a much
Yeah, I mean, I
that'd be a
think
much
the buyers probably come in.
yeah.
I tend to run a little bit. I just try and front run at the last second, and it's not a smart or safe way to trade.
Yeah.
But you got to be the trader.
If we want to look really small picture, look at this. This is kind of exactly what I was talking about just now, just on a smaller time frame, right? We had a defined range where the kind of top was 302 to 300, rejected it one, two, three times here, four, five, six times. So clearly defined range. Your bottom's right down here between 280 and 285. And then, what do? We spend 2, 3 weeks building value at the top of that range, and sure enough, we get a very clean follow through breakout. So if we just zoom out, that's what I'm seeing all right here, right?
Man, that's it. Oh, yeah,
You see that?
I do. I do, and I wouldn't have seen it if you didn't point it out. So that's why I bring it up because second set of eyes. It's
Right?
huge.
Hell yeah.
Um, yes, it's something that I've been seeing something kind of similar in terms of that failure to break out and build value over a volume shelf. My instincts are the same as they are in HD. What do you see in that?
And which one?
ZS, Z scale.
Oh, I don't trade this name enough. I don't even really look at it at all. Made a nice impulsive low that got bought right back up. Kind of been stuck in this area fighting 160 over the last couple months. This one's not super confident. Feels like this was one of those names that was overvalued during that growth mania type hype, and it's just kind of still stuck in its value area here. Um, I mean, shit. If you were buying equity down around 100, I'd say keep holding. Doesn't you're in great, but I don't know how confident I'd be buying equity around here. I don't know their fundamentals very well. I don't even know what this
That's
company.
the thing.
I don't even know what this company does.
Where I was looking at that downside failure to break out with the little gap at 148 to 150, and this one does like to move pretty quick. You can do that maybe in 1 or 2 days.
This one feels a little more confident for downside, just risking against 160. I feel like this is a better risk to reward setup. Um, I mean, shit, I just wish I knew something about the company. Like, what are they? It sounds like the tech
I
name.
remember that we talked about it before. I thought that was one of your ones where you had a lot of shares.
Not ZS. No, not ZS. I don't know any ZS. Um, let me just. It's a tech company. Yeah, Cloud-based. Okay.
It's cloud stuff, and God, it was a while ago. It wasn't actually that recent, but Microsoft entered their kind of fucking world, and it rocked, and they came all the way back up.
Well, shit, they're up pretty much 100% since May,
Yeah, it's insane.
and they're holding that value pretty well. Dips into 140 or a long, pops into 160 or a short over the last couple months. I mean, that's pretty much all I can give you confidently. Is we popped over 160 and they're already kind of back fighting under it. Um,
So since that first break over 160, and then you've got 1, 2, 3, 4 tries, to break out, and they were higher highs, but I just there's a megaphone that's formed since June.
yeah,
You guys aren't big chart better guys.
no, I understand.
Break out.
I definitely see the megaphone dealing with here. It's not a fun one.
And it just tapped that top trend line on that recent top wick from Monday. So I don't know. That's kind of why I'm looking downside and I'm targeting that.
Well, hey, your
that
point of
level here.
yeah, your point of control. Your point of control definitely gets respect. I mean, I feel like that'd be a decent short target.
That's exactly it.
Best entry was, of course, the pop over 160.
There, yeah.
Mm. Yeah, it's interesting. It's interesting for sure. I feel like I can't give you a whole lot here other than just, we pop over 160, it's a short. We dip into 140, it's a long until it's not. You know what I mean?
Exactly what I need, buddy. Sometimes you're like, oh man, I see it, I like it, and that gives me something. And sometimes you're like, well, I see this, but I also see this, and that gives me just as much. Sometimes it's better to get the advice of, the setup is there, but it's not a super confident trade as it is to be like, yeah, I'm with you.
Right? Feel that.
Every trade you take is another you can't take. So we want to take the best ones we can. But one last thing, and this is funny, and it's kind of what first made me start charting out HD. Sometimes I'll pop around tickers and I'll look at what the largest contract order of the day was. And it's not necessarily any exact reason why I do it or when I do it, but on HD, as it was like 2 days ago, the largest contract order was a sell of a buy of 911,325 points this week. I see 911 and I see 325 and I'm like, okay, let me chart it.
Oh, yeah. Real quick. Oh wait, it's just Cobain and Timo in here. Everyone bounced out. What the hell? Shoot. Well, I think that's our time, guys.
Bad dude.
No, you're good. You're good. I'm sure other people got plenty out of it. We covered a lot of good stuff, and
They left.
I'm happy to wrap up this session. And I was recording this session as well, so we'll be able to review this whole thing on either YouTube or some other storage. So I'm happy we covered it all. But yeah, I'm happy with the turnout. Honestly, I saw, we had 4 or 5 more people in here than we usually have when I do my sessions at 5 or at 3. So I think I'm gonna try and make it a habit of doing these sessions later. I think it works out for everyone better. I only did it at 3 p.m. my time just because it fit my schedule better. But with my school semester right now, it's a little bit more open. I'm in my last semester. I'm only taking a few classes, so my schedule is a lot more open, and I should be able to continue doing these sessions later. So hopefully, more people will be able to attend.
That's great, man. Thank you.
Oh yeah.
All right, have a good night, dude.
Oh yeah, man. You have a good one, Mr. Mosif. How do you do? It's popping. How's your night going? Are you talking into a potato? Your quality's pretty trash and you're really quiet.
I wonder if it's can you hear me better now?
Yes, much better.